Hey everybody, and welcome to Accounting and Accountability. It is Monday, the 7th of November, and as I mentioned last week, Nelson is away traveling for UTS. So today we have longtime friend of the show and returning guest host, Michael Lee. Michael, you're an investment analyst and financial analyst at Antipodes Partners.
Yes.
What exactly is that, and what did you study to get there?
Sure. Yeah, thanks Amanda for having me. Second time now, so I'm very thankful you're not sick of me yet. So I'm glad to be back, and I really love what you're doing every week with this show. I think it's hopefully, an inspiration and encouragement for students, not just UTS students, I think, but I hope that.
Well, you went to UNSW.
Correct.
As we call it, UTS Kensington Tech.
Yes. Oh, okay, I didn't know that.
Yeah,
okay, so
it's a new nickname for UNSW,
right.
is Kensington
Okay,
Tech.
yeah. So as Amanda has alluded to, I studied a Bachelor of Commerce, majored in accounting and finance at University of New South Wales. That was back in 2018, so a while ago, before the light rails came about. So
You caught the 580 bus? Is it the 580?
I don't.
850?
No, I took a bus from Wynyard.
Oh,
So,
okay.
Yeah,
All
yeah,
right.
slightly different. But yeah, it tells you my age now. It's been a while, but from there I graduated and started working at Antipodes Partners. I've been doing that now for 4 years.
And what do they do exactly?
Yeah. So Antipodes Partners is a global equity hedge fund. So we manage money for clients, primarily super funds, but also mums and dads.
Okay.
We manage about $10 billion in funds under management. We have a team of about 35 people, all stock picking. So we can pick stocks both long and short.
All right,
share prices
so I
rising
guess people
or
might
falling.
be a bit confused because we know a lot about, people may have heard a lot about picking stocks and hedge funds and short fund managers,
Yes.
people who are shorting. What exactly is the difference between going long and going short? Because are you actually buying stocks and investing in them?
With longs, yes. So the way to think of it, the simple difference between a long and a short is a long is betting for a company.
Okay,
A
so
short
you're
is betting
thinking it's
against
going to
a
grow in
company.
the future, so you buy into it.
Correct.
And then what do you do when you short a stock?
So the way the short works is, typically what happens is you'll go to an investment bank who may have some excess shares of a company like CBA, for example.
Commonwealth
And-
Bank of Australia.
Yep, Commonwealth Bank of Australia. And you may have a view that the consumer is getting weaker next year, housing market's going to crash next year, so you want to short something like
You
a
think
bank, like
you
CBA.
think the value of the stock is going to fall, so
So
you're
you-
taking a bet that that's what's going to happen.
Correct. So you borrow shares from an investment bank. Could be JP Morgan, could be Goldman Sachs, who have excess shares. They will like to do that because they charge you a trading cost.
Okay.
And then once you borrow those shares, you sell it at, let's call it $150 today. And let's say you're right, the stock goes down to $75. You then buy that stock back and you return the shares to.
Oh, okay. So you
The investment bank
originally
that you
sold
borrowed
it at
from.
150, then you buy it at 75. So it's almost like the opposite of normally what you do is you buy low and you'd sell high.
Yeah.
You'll
You sell high and
Sell
then buy
high
low,
and then buy it low, and
which
then
is the same.
but you sell a
premise.
share that you don't have.
Yes.
You're just borrowing.
Correct.
See, this is why I didn't do it. I
okay.
barely passed my finance major or my finance subjects.
Yeah,
at
there's some tricky
university.
accounting that goes on to
Yeah.
account for, let's call it short selling
Yep.
or shorting. Because, because you don't actually own
Yes,
the
this
stock
is really.
on your balance sheet technically, but you'd still recognize it as a, let's call it.
And we don't get into
an
that at
exposure.
university as
You
well,
don't,
by the
yeah.
way. So in Robert Chankowski's ASR, Accounting Standards and Regulations, there is no accounting for hedges or derivatives. But I guess if you go into financial accounting or if you go into auditing later on, you need to learn a lot more about
Yeah,
how
there's-
that works.
There's a bit of that. And in fact, even Antipodes, we don't do it ourselves. We outsource it to a fund of funds or a back office called Pinnacle Investment Management. So they do
Accounting
that.
experts.
Correct,
For all
yeah,
this
we
sort of
don't
stuff.
do it.
And this is, I think, what we're seeing in a lot of different companies is specialization.
Yeah.
So why have your own in-house accountants? I've seen some businesses that say, oh yeah, we use a virtual CFO.
Oh.
So rather than have a CFO themselves, they outsource their CFO function to someone. They can't afford to pay someone to be a CFO 5 days a week.
Right.
So they have a virtual CFO that works with them, 20% of a day, 5 days a week.
And he may be working
And works
on,
with other
3 or
businesses.
4 other startups.
Yeah, yeah, absolutely.
Okay.
So now the reason that I reached out to, Michael reached out to me, and then I thought about the stories for today, is that you do a lot of understanding and analysis of firms within the tech space.
Yes.
Because your clients, well, I guess your portfolio of what you look after is tech in North America and Europe.
Correct.
So that would be Facebook.
Yeah, like a Facebook, Google, Amazon,
Twitter,
Twitter, Snapchat, Pinterest, Chewy, Etsy, Farfetch, eBay.
Canva.
Yeah, Canva.
Oh, well,
Although it's a private company.
It's a private
so
company.
We only deal with public companies.
Okay, you only deal with public companies, so you don't invest as an
investor, no.
equity partner in those types of things. So what came out, and some people might have seen this, I talked about this on social media this week, is that Safety Culture is a big software as a service company here in Australia. It's what they call a double unicorn, so it's got a valuation of 2.1 billion. It's not a publicly listed company, it's a fully privately owned company, but based on equity they've issued, they think that this is the potential worth of this company. And there was a quote from their CEO regarding their $62 million loss, which means that their expenses were more than their revenue by $62 million. And the CEO said, the other thing is everyday people don't understand that the $62 million loss is an accounting loss on paper. It's not a cash loss and not the amount of money we spent in a year, but it includes equity we issue, so the value of equity is part of the loss. Yeah. Now, there's a whole lot of accounting issues with this thing.
Yeah.
A $62 million is an accounting loss on paper, right? A loss is a loss, whether it's on paper or otherwise. Accounting students should know that that's different from cash flow.
Yes.
Right? So, Michael, why don't you explain to people, like we will look at a profit and loss, but what's the other financial statement you'll look at if businesses are talking about cash?
Yeah, so like, and I say this as an industry professional, like we don't just look at a P&L statement or an income statement. There
or
is also
CEO comments.
Yeah, there is also, like regulation for other statements that need to be provided by every company. In Australia, that includes not just an income statement, but a balance sheet and a cash flow statement. So I think what Amanda was alluding to was the cash flow statement side. And it is true. I think the first part of his comment is fair, I would say.
Most people don't understand accounting.
Yeah,
that's pretty fair.
Yeah. And I think the comment I would make, to that is, there is a difference between, like how much revenue you make and versus how much actually cash flow you make. There can be a difference.
Yeah, and
look,
at cash loss would be, with timing differences. But you'd certainly be worried if you were looking at a publicly listed company that had negative cash flow over the year, because they'd be eating into their cash reserves.
Correct.
But for a company that is, technically, I don't know, they're not a startup, but they're a tech company, and they're private.
Late stage startup.
That you'd be generating a lot of cash from investments in financing, in terms of people investing in you, and then you spending on these types of expenditures related to investment. As an accountant, I'd be looking at, there are 3 different sections of the cash flow statement: operating, financing, and investing. Obviously, they're going to have a lot coming in from their financing if they're raising more capital or if they're issuing shares. If they've bought other companies, there'll be funds going out, or potentially equity exchanges. But for me, the interesting thing is looking at cash flow from operations.
Yes.
It's trying to figure out if they're self-sustaining. And they said, look, we could have 5 years of making losses before you move forward. From a finance and investing perspective, like, how many years do you let this go on before you go, we might need to actually be making money from the thing that we sell or the service that we provide?
Instead of selling a pipe dream to investors.
So as an analyst, how do you decide, like, how frequently are you looking at the financials and the other information of the firm and going like, yeah, we should keep investing, or no, this is time to get out? Is this something you're always doing?
Yeah, you constantly, I think, as an investor, review your thesis. So what that means is before you buy it, let's say before you long or buy any stock that you hope for the share price to go up, you need to have a thesis, which is an idea or a script or a story in your head.
Why you think this company's good value.
Yeah, why you think this company is cheap, why you think it's resilient, and ideally, there's going to be signposts along the way that you can track. If it's a business that's performing to your expectations, maybe it will generate a certain revenue growth. It will generate certain margins. It might do It might have a new product that you think will do well. It might be a change in regulation that you think will help the company.
Yep.
So you should have signposts along the way, almost like a script.
Yeah.
And you hope that that's and you
And if
watch,
you're hitting those milestones,
that the
just like I
script
guess
plays
you
out.
know, my equivalent would be babies are expected to do certain things
Correct.
at certain stages.
Yeah,
So
exactly.
if they're hitting up their milestones, then you're going well.
Then you go, okay, like I'm comfortable and I have conviction holding on to the stock because it's playing out the way that I expected it to.
All right.
You might in fact even add more to the stock.
Well,
but if it's not, then you will cut
Then
it.
you'll be like, okay, time to
start to
cut
review
our
it.
losses or scale back.
Yeah.
Let's talk about Twitter.
Sure.
Because was your fund invested in Twitter?
Yes,
Yes. Did you make money off Twitter?
we did.
Good. I'm glad
As a long, it was a very tough
So
long.
as things were going on, and obviously, you know, Elon offered to buy Twitter,
Yes.
then he pulled out,
Yeah.
and then the board tried to force him to buy Twitter. Throughout all this process, does that influence your thinking about whether to stay in, or you know, long, or to go short on a company like Twitter?
Oh yeah, absolutely. I think
And does his volatility make any?
it makes it hard.
It makes it hard?
Yeah, you know, for those who may not know, Twitter is what I call a social media knowledge repository.
I'm trying to
it's-
navigate Mastodon
yeah.
at the moment.
Yeah,
it's
like I think
hard. I'm
you know,
confused.
yeah.
I know how to do Twitter.
Yeah, no, I think you definitely know how to do Twitter. And you know, it's the place where people like to go to share ideas, right? It's like a public square, is what Elon Musk will say. And you know, it's tough because this is actually, you know, for the longest time, it was the most underperforming digital social media asset out of all its peers. Like
Yep.
Pinterest was doing better, Snapchat was doing better, Facebook was doing better, Google was doing better.
All right.
And if you look at, you know, the stock price this year, year to date, Twitter has been the best performing.
Yeah.
So who would have thought? And you know, for the longest time, you know, at least our view of Twitter was that it was just undervalued. There were changes being made to product velocity. They were releasing
I found a
more
button
products.
a while ago that you
Yeah.
could like edit your tweet, but it cost you money. But
Yeah,
I
it
was like,
cost
if I
you
was
money.
desperate,
Yeah,
I could edit a tweet
yeah.
rather just delete it and tweet again.
Yeah, exactly. So there were changes. There were two activist shareholders on in Silver Lake and Elliott. There was some evidence of accelerating revenue growth again, if you looked at it on a quarter-on-quarter basis. So there were green shoots, I would say, to the story during the last 2 years. And then obviously, you know, we're in a digital advertising slowdown right now, and every stock is not immune.
Yep.
Facebook's down, Snapchat's down, Pinterest is down, Google's down. But you know,
Really a bad time to be
It
buying
was.
a big
Exactly.
social media company.
But,
which
you know,
sort of
it-
explains why he's fired half the staff,
yeah,
cut the CEO, the
Yeah.
CFO,
correct.
the legal team.
Yeah, because the reality is,
He's got to figure out efficiencies.
yeah, Twitter is not immune to the slowdown either in digital advertising, as advertisers pull back ad spend because they see the consumer is weaker from higher inflation. And
Yeah, I'm
you
not
know,
going on Twitter to look at stuff to buy.
Yeah,
To be
it's-
honest,
that
every time
too.
I see an ad,
Sure.
I just click the block button.
Yeah.
Which probably doesn't help the revenue
Yeah.
generation model.
I agree.
somewhat.
And so, you know, like, I think it was very, let's call it fortuitous that if you were an investor long on Twitter, that, you know, you had someone who just, you know, basically shot himself in the foot after a vote on Twitter to buy
Yes.
Twitter. And, you
Seems
know,
very impulsive.
it was.
It wa- and now we sort of
particularly now
stuck in
that
it.
you know that he overpaid for it because everything has sold off.
Well, there's $20 billion in debt.
Yeah.
Somebody has lent him $20 billion.
Yeah.
And I tell you what, that had to have been a hell of a business case
Yeah.
to say, look, you know, what collateral is he putting up as well
Yeah.
for this $20 billion? And I think I looked at the interest payment is going to be $1.5 billion a
Correct.
year.
1 to 1.5 billion.
So
a
you
year.
need to be making revenue at least to cover your costs and your interest payment.
Yeah. Yeah.
Otherwise, do you think Twitter is too big to fail?
I think it's.
If it's not managed well, or if you can't generate revenue, or if people don't spend their, was it $8.99 a month to get their blue check mark back? I never
Yeah.
had one, so it's not a big deal for me.
Sure. Yeah.
Do
Will you get one?
No.
Okay.
There is
There are other
nobody.
qualms
There
about
is
Twitter that
nobody
you have, right?
attempting to impersonate me online, so
Yeah,
I
okay.
feel no need
Yeah,
to.
you feel no need to
to
yeah.
get verified at all.
to be treated as
No, as a celebrity.
Yeah,
But
celebrity.
now that anyone can get it, I guess, you know, that's one way to try and combat misinformation.
Yeah.
That But then there's sort of going to be this impetus amongst academics potentially to get the check mark. Obviously, you know, we use Twitter for work.
Yeah.
It's tax deductible, but I don't see myself doing it unless unless perhaps the algorithm favors people who have a check mark versus people who don't, which could, you know, drive the business model that way. But it's a bad time to have overpaid for one of these companies. But is it too big to fail?
I think it's.
Will someone always come to Twitter's rescue?
I think someone will always.
So
I think someone will come to Twitter's rescue. You know, because any company is worth what people believe it to be worth. Now, obviously, that's what, you know.
Well, Elon thinks he can turn it around.
Yeah, that's what people will say.
I will be keen to see, because I think one of the hardest bits is content moderation.
Yeah, the fundamentalist in me, or, you know, every value investor will say that the company is only worth as much as it's as much free cash flow as it can generate.
Yeah.
So the question
and what
really,
is free cash flow?
Yes. So that was something
let's clarify this from last week, because Nelson had a definition for a free cash flow. But let's talk about.
It's not wrong. It's not wrong. It's just everyone has a different interpretation.
And this is because it's not a regulated term.
Yeah, it's not regulated.
So the AASB or the FASB or the SEC.
Yeah, they don't tell you what
this is how free cash flow is.
Yeah.
But as an analyst, what do you define free cash flow as?
Yeah, when we say free cash flow, like put simply, we mean net cash flows from operations. So that subtotal line in the cash flow statement, less any capital expenditures. Typically, that line will be in the investing section, which is purchases for property, plant, and equipment.
Buying a subsidiary.
Yeah.
I think.
No.
Is that total?
Well, it can be. It can be. It will be. Yeah. That's kind of where it becomes a bit more nuanced, because I would say if it's ordinary free cash flow, I'd probably exclude it.
Okay.
Because it's not part of the general
one-off
operations of the business.
It's not part of general.
Unless they do acquisitions every year, in which case, then you would probably subtract
And there are some tech
payments
companies
for subsidiaries.
that really
they do it every year.
that just
like an
grow
IBM.
by IBM just grows.
I certainly think, you know, I just encourage that students maybe, you know, when we do all these kinds of discussions, I think it's really trying to connect, you know, like obviously what we learn to the real world. And I think there's obviously a lot of problems in the real world that we encourage students to really think about.
Yeah,
right?
to think about that is think about, you know, now sometimes I'm going for less sustainable food options because I'm thinking about budget, but I'm trying to weigh that up by saying, okay, well, I could maybe volunteer my time. That could be a way that I could still provide some support to other people when times become tough.
Yeah.
Or by, you know, amplifying other voices, that sort of thing.
Yeah, and I know, like, a great story that, this is why I think I have a lot of respect for you, Amanda, is I know a lot of international students who do come to UTS. Obviously, you know, foreign land for them, may not have their family, it's hard. And I know you shared stories with me before about supporting those students where they can. Maybe that's trying to help them find work or just being a friend, right?
There's a job going at National Audits Group.
Yeah.
I posted it on my Instagram. Make sure you check it out, because they're international student friendly as well.
Right. Okay.
Yeah.
So I think, like a lot of that stuff is something that I would encourage, you know, students, you know, to think beyond just, you know, the walls of academia. I love the academics, but I certainly think that, you know, from my work that I've done now for the last 4 years at Antipodes, and covering, you know, stocks globally and looking at North America and Europe and talking to my colleagues who cover other countries, you realize, there's a big wider world out there beyond the walls of accounting. But I think maybe in terms of like circling it all back, I do think accounting is one of those things that is very interesting. A lot of people think of accounting as some guy hidden in the back of a room in a corner, just typing away with numbers in a spreadsheet.
Yeah.
Partly true, I would think. but I would say, and I had this conversation with Victoria Clout from UNSW last week.
Who's been one of our co-hosts before, Yeah, at
an industry panel. And I would say accounting is important because it is the language of business. And you know, the world that we operate in lives and breathes in business. Whether that's a transaction that you do on a cafe or, you know, buying a pair of clothes, you know, all of this is business.
Well, these are life skills,
Yeah.
right? You know, budgeting, especially in current times, understanding budgeting, time value of money, inflation, you know, profit and loss, even from your own personal perspective, helps you plan for the future, especially when we're coming into, we are in and heading into further uncertain times, according to what the Reserve Bank is
if you
telling
believe
us.
them or not. But I think the point about all of this is to say it's Yeah, I would encourage students to think about just, yeah, obviously accounting as, a career, and, there's obviously not just the accounting that I described, like of a person sitting in the corner in the back office, but yeah, other fields like
And
investing,
transfer into investing.
perhaps, or any other careers that maybe I haven't thought of that, or we haven't seen in the workforce, but could be there in the next 10, 20 years.
Fantastic.
So
Now, to give Michael a plug, Michael, you also have a regular newsletter.
Yes.
And so I will drop a link to the newsletter in the YouTube video. And Michael, can people follow you on LinkedIn?
Yeah, absolutely, it's fine.
So Michael talks about all this sort of stuff, and you've also done the CFA.
Yes, I have.
So, and I think you write on your blog. Is it still on Substack or is it somewhere else?
I have my own website now.
Oh, he's got his own website.
michaellee.io.
So there's also, I know, some material there about helping students understand how to navigate the CFA and do well at CFA exams.
Which is more of a postgrad.
More of a
or
postgrad
assessment.
thing. So if you're interested in, you do your
After
accounting and
uni.
finance degree and then you want a finance qualification, CFA is probably the most popular one
Yep, I would say.
out there. And if you do the finance major at UTS, we're CFA accredited, as well as being CA and CPA accredited for accounting. So you can check out Michael's website for all of that. All right, I hope everybody is having a great week. Here at UTS, it is the first week of exams. Exams start today. So good luck to everybody, and we'll chat to you all soon.